Good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Tuesday, October the 12th. Morning, Paul. I think you've got a few problems with your down your house, some of your pipes or something, haven't you?
Yeah, I had a pipe burst in the bathroom here very early morning.
All right, we better rattle through quickly so you can check it's working before you get into big trouble, though. Probably first one to mention is Greatland Gold, isn't it? The mega 100-bagger Greatland Gold, and we're all looking for the next one. But talk me through Greatland Gold.
Well, this one is a PFS Stage 1 release on the Have Iron Copper Gold project that they are in joint venture with Newcrest on, and this essentially is a smaller scale startup scenario that they modeled here. 14 million ton reserve on what they call the Southeast Crescent zone only, which was essentially the first zone of real grade that they had drilled into. It doesn't include the entire resource at all, but this is just a modeled scenario whereby they can get it into production sooner. Works out with a IRR of 27%, which on a reserve grade at 3.7 grams gold and 0.5% copper. And they're going to initiate the next drilling round in order to see if they can push the production rate from 2 million tons a year to 3 million tons a year by pulling the inferred resources into what would be measured and indicated in order to boost the reserve. So essentially, it's a first case which indicates to investors that, yes, there is a mine here, and now it's a question of scale.
Well, they've got Newcrest in there as a partner, and it's been a phenomenal performance. So, as I say, we're all looking for the next Greatland Gold. Griffin Mining, which is one of those fascinating companies listed on AIM, but it's obviously all its mining is in China, but it's going pretty well, isn't it?
It is. Q3 production results released today. That worked out that they're processing now at a rate of about 100,000 tons a month, and all of that is coming out of Zone 3 with the Zone 2 zone yet to come into full-scale commercial production. The tons processed was a rise of about 6% quarter on quarter, where the zinc grades had fallen a little bit as well. The pricing, however, was slightly higher quarter on quarter for zinc and lead, but slightly lower for precious metals. And as a result, steady as she goes here, but nothing otherwise totally thrilling. And it's nice to see the milling and production is meeting according to schedule.
It'll be a little bit harder next year because they're going to have to stop mining during the Winter Olympics and the Winter Paralympics because the mine is close to where they're being held and they're going to be told to stop mining, which will affect their production numbers slightly. The stock, though, back at 90p looks very cheap in my view. If one can, for want of a better word, at the moment with the geopolitical situation, stomach investing into a Chinese miner. Okay, Hummingbird Resources, Paul's got some news out today.
Yes, that's right. They're fully funded now to put the Kouroussa mine into a project build. Kouroussa being a gold project in Guinea, which was shareholders may remember in the past was held by Cassidy Gold. It's a nice high-grade little, or not that little, a deposit. It's going to, in this case, it's going to be a mine that has something in excess of 100,000 ounces of annual production. Its internal rate of return, as it's modeled, is 71%, so it's going to be very profitable for Hummingbird with a capex of about just under US $100 million. And it will mine at a rate of about 1 million tons a year. They have a 16,000 meter program underway in order to infill the remaining resources and do final bench planning, but all looking very good there, and nice to see that the financing now in place to get it built.
Okay, and we had Q3 production results, I think, from Altin Gold, didn't we?
Altin, yes, that's the AIM quoted gold producer in Kazakhstan. Q3 production results here, where the gold output increased 15% quarter on quarter to 9,700 ounces. produced. This you can see how the newer mechanized mining equipment has changed the operating and production profile of this operation this year, and this is clear evidence of that. The ore grade also rose 5% to now be over 2 grams per ton, but the actual revenue earned was at $12.8 million, so only a small rise there due to the somewhat fall in gold price comparatively from earlier in the year. And they've also have another phase of operations to begin in what's called area number 2. That permitting for that project with the government is going according to plan so far, and they hope to have that up and running around 2024 or so.
I'd have to just correct you there slightly, Paul. Alton Gold is not actually on AIM. It's on the main market.
Okay, very good. All right.
Let's keep things correct as much as we can, Paul.
That's right.
Has to be said, I think the share price of this one has always been quite difficult. It's obviously, it had a nice bump up, should we say, at the end of 2020, but it's drifted back down again. It's always quite difficult to know exactly what is going on in this company. Okay, that's anything else you want to talk about, Paul? Or do you want to go back to bathroom pipes?
Westwater Resources, that's the company which New York listed, which owns the only commercial quality graphite deposit in the United States, in the state of Alabama. The board of directors has given approval for a $200 million capex spend in order to put that mine into construction. The mine is called Coosa, and it's in the state of Alabama, in the heart of the southeast United States automobile manufacturing area. So they will be producing both expanded graphite and battery grade graphite as part of a phase 1 development, but they also intend to push right on ahead to phase 2 development, which would push the production rates up substantially by about 4 times to 32,000 tons per annum of a saleable product. IRRs are relatively low on this, but at 20% or under. But the thing is the deposit is quite large, life of mine of 35 years. So more than enough time in order to make suitable profits over several commodity cycles, I think.
Very good. All right, Paul, I'll let you go back, sort out your pipes, and we'll speak again tomorrow.
Okay, very good.